My name is Ari Redbord, Head of Legal and Government Affairs at TRM Labs. Welcome to TRM Talks. TRM Talks is brought to you by TRM Labs, the leading provider of blockchain intelligence and anti-money laundering software. Over the last few weeks, UK financial regulators have been busy on crypto policy, from a final response to consultation with an update on how the financial regulator has decided to approach the cryptocurrency travel rule, and to managing the risk of stablecoin and other projects. And this is just the beginning. Today, TRM Talks is joined by James Gillespie, Policy Advisor, Sanctions and Illicit Finance at Treasury, and Ian Taylor, Executive Director of CryptoUK and KPMG UK, to discuss Treasury's final rule on the travel rule, unhosted wallets, and how the UK is working to become a global crypto hub. Good morning, gentlemen. Thank you so much. Thank you so much for joining today. It's interesting, even as we were kicking off today, we were in a conversation on sort of the state of politics in the series of a number of resignations in the cabinet in the UK over the last day or so. We're going to do sort of what we normally do at TRM, but just sort of given current events. And Ian, you mentioned sort of just a few minutes ago that you're being asked a lot about sort of the political environment and really how does it impact all the work that's happening, around crypto regulation. Do you want to kick us off sort of with that question? And James, maybe you can sort of chime in as well.
Yeah, thanks, Ari, and a pleasure to be here again on TRM Labs. Look forward to the discussion. Yeah, so it would be remiss of me not to mention the current political situation in the UK. I'm sure all your viewers are aware of it. It's been a pretty traumatic rollercoaster last 48 hours. And so I'm being asked by lots of the community, both members of CryptoUK and the journalist community, what does this mean for crypto policy in the UK? Because if we roll the clock back to the beginning of April, Her Majesty's Treasury came out and said we want to be the crypto hub. And a whole host of initiatives were put down at that announcement, which has generally been perceived by the global community as very positive. And that's really good for UK PLC, that folks want to come to the UK and innovate and build new products and services in the crypto and blockchain ecosystem. So my personal view is government is government. You can cut off one head, but it's always going to still be there. And James can speak to, as a civil servant or public servant, as you say, in the US, he's still doing his job, and so are his thousands of colleagues in Treasury. What I would say is the hard work that the community's done educating and advocating for the industry with the Chancellor and the Junior Minister, John Glenn, over the last 2 years has really helped the UK set out its stall. Now there is a little bit of a question mark around who the new ministers will be in these positions and what their views and experience and knowledge will be for new policy, which is needed for sure. I think everyone in the industry, both private and public sector, realise this, whether it be around consumer harms, additional fin crime, which we'll talk about later. But yeah, just really hopeful that we can still engage with government as we do and educate and really allow the UK to achieve its goal of being a crypto hub.
Thank you so much for that, James. You are as you mentioned, a civil servant, sort of, and I imagine having spent years as a career official within the U.S. government, you just keep on keeping on. Was my experience. I went through numbers of political appointees in various positions, and the heads down work is done by the career civil servants. Is that sort of the moral of the story here as well?
Yeah, absolutely. So the situation at the moment is that we still have a government, although the Prime Minister has set a timetable for his departure and for the election of a new leader of the Conservative Party. But the government is still the government, and the statutory instrument, the bit of secondary legislation that implements the travel rule, we laid before Parliament recently, and it is still before Parliament. So from our point of view, it's the travel rule is very much still government policy, and moreover, as you'll be aware, the travel rule is an international standard, is not the sort of policy that we would be ripping up and revisiting when a new minister came into post, it's one where obviously there is international expectation that we implement it. So yeah, I just want to reassure anyone who may be wondering, this doesn't mean that we're going to be reconsidering things. The government is still in office, and as Ari said, we're keeping our heads down and progressing as best we can.
No, thank you so much for that. And I knew this was going to be a very timely discussion. I did not know that we would be reacting to events on the ground in real time. So yeah, no, thank you for that, to sort of kick it off that way. James, look, you really are sort of at the epicenter of much of sort of the regulatory policy today in the UK. Would you talk a little bit about your journey to crypto? How'd you get involved in this space? Where the interests come from, and sort of maybe a little bit about the work that you're doing?
Sure. So I've been in my current role now for around 2 years, and I originally joined, was more of a general emerging risks post within the Sanctions Illicit Finance team, and just because of how things were at that point in time, the travel rule was a really big part of that, and also crypto more broadly, with that really widening uptake of crypto as an asset class. And so I came into it, previously having worked in the more mainstream area, financial services policy on some EU exit issues. So I wasn't a complete stranger to financial regulation, but crypto was quite new to me. But it's been a great couple of years. I've learnt a lot about crypto, and I've also become an advocate for crypto, at least with my friends and family. Because I do very much think that it's got like a really central place in the future for financial services and technology, and so it's really exciting to be here near the beginning of that regulatory journey, to try to make sure we're doing it in the right way, which supports both industry and makes sure that we've also got a safe and stable system as well.
Terrific. Yeah, no, thanks so much for that. Ian, you really are a central figure in sort of advocating for the crypto industry within the UK, and have been for some time. Sort of how do we get here? I'd love to kind of hear a little bit about your journey to this space, and and how you ended up really as one of the leading voices for the crypto industry in the UK.
Yeah, sure. Well, I have a background in banking and was naturally interested in Bitcoin, for example, as a new investment asset class a few years ago. And through my involvement with the wider 5 to 10 years, got involved in policy, working first for Global Digital Finance, helping government understand what this new technology was about, and then took over running CryptoUK, the UK's trade association, at the beginning of 2020. So I've been really involved in the community, not just here domestically in the UK, but also across the globe, helping global standard setters such as Financial Action Task Force, OECD, Bank International Settlements, but also competent authorities sort of navigate the way through the issues that have been faced for the industry, but also help policymakers and the regulators understand the benefits that the technology brings to many aspects of society.
Ian, thank you so much. And I think one thing that's really kind of extraordinary about the panel today is that you uniquely, I think, understand the importance of working with regulators and with the public sector. And James, I think that you have shown throughout your time that the importance of reaching out to the private sector. And this is, I think, should be a really terrific conversation around particularly with that as a theme here. James, I think sort of what really precipitated this conversation was the response about 2 weeks ago now to consultation on a bunch of different sort of AML, CFT related issues. But the one that really obviously jumped out to the crypto space is on really sort of Treasury's final view on the travel rule. Would you talk a little bit and maybe high level at first, and then dig in a little bit to sort of what it says, what the final response says, and sort of what it means, and maybe even a little how did you get there?
Sure. So I won't go into too much detail, as I assume most people on the call have a reasonable amount of knowledge about the travel rule, but I will give a brief sort of overview of how we've gone about trying to implement, and then also focus on a couple of the areas where we have changed our proposals in response to feedback. So overall, our approach has been to say, as a starting point, we've got the funds transfer regulation, which it applies to wire transfers. Let's sort of use that as a starting point and adjust as necessary to suit to the crypto infrastructure and the crypto ecosystem. So overall, we've got an approach of where a transfer is over €1,000, we'll be requiring the same beneficiary and originator information as for a normal wire transfer. Similarly, there is a de minimis threshold below which, below €1,000, where more limited information needs to be sent. And there's also an exemption for where each crypto asset firm, crypto asset service provider is within the UK, then again, more limited information needs to be sent on the basis that if a request is made to provide it, then obviously it would still be provided within a short period of time. So those are the standard travel rule things, and those stick very close to what we've done with wire transfers. And we think it's also important that not just from a perspective of consistency, but also because we don't really want to have a situation where different industries, where there's an uneven playing field without a good reason. So we want to make sure that the kind of the regulatory treatment of both normal financial services and fintech and crypto is the same, unless there is good reason to depart from the treatment. So that brings me on, I think, to some of the areas where we've done things a bit differently because it's crypto. And so there are a few concepts which I know some people are curious about and which look a bit different or don't apply in the context of normal transfers. So the first of these is this idea of an intermediary crypto asset service provider. So the Financial Action Task Force standards, these mention intermediaries in the context originally of wire transfers, in which case you're talking about correspondent banking, but they also mention intermediaries in the context of crypto assets. So for crypto assets, obviously there isn't a correspondent banking system. So the question we got from industry and other stakeholders was, what do we really mean by intermediaries? And the answer to this, and the reason why we've included intermediaries, it's not just because the FAT have asked us to, it's also because we think that the market's quite possibly going to develop in a way where subcontracting certain parts of crypto asset transfers is going to become more common. And so one way might be you've got a company that wants to break into the crypto space. It's already an established financial services firm, but doesn't wish to do so by building everything itself from scratch. So it enters into a contract with a crypto firm to provide some of those transfer services for it. Or even a situation where an established crypto exchange, there might be specific services of theirs that they contract to another exchange because maybe they don't have enough volume of that particular asset or whatever. So what we wanted to do is really make sure that where there's a relationship of subcontracting or sub-custody, that the obligations fall on everyone in that chain. It's not a situation where suddenly the information gets stuck because the intermediary isn't under a legal obligation to send it on, or because the intermediary is feels as though it can't send it on because it hasn't collected that data in line with legal and regulatory requirements. And depending on what your data protection laws are like in your local jurisdiction, that could potentially be an issue. So that's what we were trying to do with intermediaries. And we've been clear that we want to define intermediaries as being someone who is an intermediate part of that chain, i.e. is not directly contracted by either the originator or the beneficiary of a transfer, but has a relationship with one of the crypto asset service providers on either side. And the second thing is we want to be quite clear that this is not dealing with software providers and people who aren't performing crypto asset service provider functions. So it's only where an intermediary already fulfills the definition of a crypto asset service provider, i.e. by way of business, they are facilitating the exchange or transfer of crypto assets. It's only in those situations where an intermediary would fall in scope. I hope that kind of allays some of the queries and concerns that we had during the consultation process, whereby people were concerned that it might be a bit over-inclusive if we talked about intermediaries. The second area where I think there's a pretty big difference from what we've got currently with the wire transfer rule is around unhosted or self-hosted wallets. So obviously, private individuals can't and don't have access to the SWIFT banking system or similar. You have to go via an institution which is part of that system, and the benefit to that, obviously from a anti-money laundering perspective at least, is that there is a gatekeeper on either side, and all this information is verified and can be shared. However, with unhosted wallets, which we do absolutely believe those are an important part of the ecosystem, and they are something that we don't want to sort of squash or by default end up outlawing. With unhosted wallets, you need a different way of sort of dealing with those, because there isn't that verification and data collection process that there is for a crypto asset service provider. And the question for us was, well, how do we want to approach this? Because unhosted wallets obviously don't pose no risk. We know, because we've seen cases of money laundering, terrorist financing, and so on, which have used unhosted wallets, and we've seen cases where law enforcement have seized cold wallets, physical devices being kept by criminals. So clearly, unhosted wallets can pose a threat. At the same time, we're conscious that there are lots of legitimate reasons why someone would have an unhosted wallet. I personally use an unhosted wallet, so we're not at all of the view that we should be sort of cracking down on them. And so with that in mind, what we've decided to do is have a system where the information on a transfer needs to be collected on a risk-sensitive basis. So what we mean by that is when the crypto asset service provider receives a transfer from an unhosted wallet, or is asked by its customer to make a transfer to an unhosted wallet, it may have to get the information on the beneficiary originator from its own customer. But it will only be required to do that on a risk-sensitive basis, where the transaction has, for whatever reason, whether it's geographical or something else, has been identified as being of higher risk. And that's partly because we don't want to have unnecessary data collection, because that can also be a financial crime risk if you've got a big pool of data sitting somewhere that can get hacked, but also because it's not verified information. It can still be useful, but we felt that it's not proportionate to collect that in each and every case. The other couple of areas which we changed in response to consultation feedback. So one was around the implementation period. So there's going to be a 12-month implementation period, meaning that the travel rule comes into force September 2023. Obviously, pending Parliament's approval. I don't want to jump the gun and assume that RMPs are going to agree. But the other thing is that we're also going to, when it comes to sort of some of the concerns which are expressed around, what time do you calculate the value of a transfer and so on. We're going to hopefully try to, and Ian might be able to speak to this a bit more, try to fill some of that out in guidance, because we're conscious of not wanting to put so much detail in law that it becomes inflexible. But we also know that the sector and customers want to know, want to have as much certainty as they can about what their obligations are and what to do. So aware that I've gone into a bit of a monologue, so I'll stop there.
No, actually, that's exactly what I was hoping for here, because I think this is the one place we want to be as granular as possible, and really appreciate that perspective. Look, when I read it, it struck me, and before I get to Ian, I just kind of wanted to ask you this, because I think this is where he also likely played a role. It struck me as really the sort of the product of timely consultation, but then also sort of really thoughtfulness from regulators on sort of getting to the right place. Would you just kind of briefly describe the way you engaged with industry in that process? And then Ian, honestly, like I would just like to hear the way that industry, engaged with government here as well, to kind of just get a feel for this. And I'll just say, like, people ask all the time, hey, how do you talk about wanting to public-private partnerships or engagement? How do we do that? What does it look like in practice in a process like this?
So it was interesting from the Treasury point of view because we started without having some of the established relationships that we normally have with the big banks and so on, and entities which have been regulated for a long time. Obviously, crypto firms only came into scope of the money laundering regulations in 2020. So it was a new process for us. But what we did was we were aware that Ian and CryptoUK had entered the scene as the primary industry group, and so we wanted to proactively talk to them, and we also wanted to make sure that we were, in addition to just sending out the consultation document, which can be a bit sort of technical and intimidating, we wanted to make sure there are opportunities to have stakeholder roundtables. We wanted to make sure that we talked to Ian and said, can we set up some of these with his members? And obviously we also talked to companies like TRM Labs and others in the crypto compliance space, because when we were coming into this as quite a new set of relationships, we wanted to make sure we were proactive, that we weren't just allowing those who are most used to or confident with dealing with government to only get their voices heard. We wanted to make sure that was as a broader set of stakeholders as possible were going to respond, and that we were going to be able to have a discussion with.
That's really helpful. Thank you so much. Ian, from your perspective, I'd say the consultation process, would love to kind of hear a little bit about that. Was it sort of your just charming personality that allows you to sort of engage in this way, or subject matter expertise, or both? But no, and then also sort of what is the take, or what is your take? What is the industry take on sort of ultimately what we see here in terms of final form, whether it's unhosted wallets or sort of overall travel rule?
Yeah, it's certainly not anything to do with my personality. But I would first touch on the collaboration and public sector seeking the views of the subject matter experts, i.e. the private sector's folks, live in this every single day, has been excellent, I must say, not just from James's department in Treasury, but across the whole of government. We've seen a real improvement from all of government departments in the last year to really seek input across the board, not just from CryptoUK's members, but from other individual institutions. I'm constantly meeting market participants, and they're saying, "Oh yeah, we met with folks at Treasury the other day. They're great. Yeah, we're talking about stablecoins. We're talking about fin crime policy. We're talking about consumer harm policy," which is great. So that's a pat on the back to the folks in government, which has been really widely appreciated by the industry. And yeah, just to set the scene, crypto participants that we work with, 99% of those that build new innovative products and solutions want to be regulated, want to be compliant, and want to engage in the discussion in what is a largely unregulated industry. So it's vital that achieve the balance and proportion of regulation that I know James and his colleagues in Treasury are seeking to achieve. So all that backslapping done, let me move to the technical details in regards to the key issues that James touched on. So firstly, transferring of funds to self-hosted wallets, non-custodial wallets. I thought that was fantastic when we saw that released from government, which is out of not necessarily the same approach taken by other jurisdictions. I mentioned the continent, Singapore and Switzerland, others that are seeking to capture data, sending to self-hosted wallets, irrespective of, say, the values. That is not really proportionate in our view as an industry. Look, we're at the beginning of developing products and services, and I take James's point that a self-hosted wallet is within the overall ecosystem, but is not a central entity. And this is what the FATF, Financial Action Task Force, struggle with, identifying central market participants that we've been used to regulating, such as financial industry, players, but when it's just a piece of code that allows you to store your own assets, digital assets, then we have to be very careful. So this is a very good proportionate risk-based approach by the UK government. I think broadly the community welcomes, and we'll stay engaged with the discussion as further guidance comes out. And then regarding some of the other issues, we have been invited by government to join a whole host of initiatives that the UK has, working with industry, Joint Money Laundering Steering Committee, other trade associations, to really help develop additional guidance that provides that clarity that perhaps is not there at this first pass, which, as James said, I agree with. When you write policy, you want it to be, not too broad, but you don't want it to be too detailed in what is a very dynamic industry, because you have to be, proactive in terms of future-proofing certain issues, but not too prescriptive in who's included and what activities included. So overall, not perfect, but a damn good first effort.
That's fantastic and really helpful. I think one thing you both spoke to, which is interesting and is really true of any sort of policy making, is that there's the legal framework, but then really it's up to regulators to implement through rulemaking. And it sounds like obviously sort of some of this will ultimately come down to sort of the way that process takes place. James, before I move on to other issues, because we could spend the entire hour on travel rule and unhosted wallets, there was a great question in the chat around sort of the risk-based approach piece, right? We understand that, in most cases, or at least there's no obligation around unhosted wallets. However, the mandate is to take a risk-based approach, essentially, in those cases. Could you give sort of an example of what that looks like or what the expectation is there?
Sure. So I'll try to be as helpful as I can, but at the same time, this might come across as like one of those answers that you sometimes got from your teacher, where they're trying to say, think it through and work it through yourself, which is not always the answer you want to have. But
that's always, whenever a regulator talks about a risk-based approach, that's always the answer that you get. So yeah. No worries there.
And
so
I think,
working.
Yeah. So, and this kind of ties in with the not being too prescriptive side of things, is that we think it would be good to have each, and it's actually a regulatory requirement, that each firm thinks through and develops its own risk-based policies, controls, and procedures, reflecting what they know from the National Risk Assessment of Money Laundering and Terrorist Financing, and the Risk Assessment of Proliferation Financing, and also about their specific products, potentially looking also at the jurisdiction in which the customer is, or which they tend to be making transfers to. So all of these factors, and there isn't kind of an exhaustive list of which you can tick off from. It's really about sort of each firm understanding in the context of its own business what the risk factors are, and obviously, if you're based in the UK, those policies, procedures, and controls will have been looked at by the FCA, our local supervisor, because they'll want to, as part of the process of registering a firm, be sure that the firm is fit and proper. So with using that as a starting point, how might you apply this in the context of an unhosted wallet transfer? So, for example, if you were to be receiving a transfer in from an unhosted wallet, maybe you don't know its jurisdiction, but you might know, for example, that your customer is maybe based in a higher risk jurisdiction, or maybe frequently makes transfers to, let's say, a crypto firm which is in a jurisdiction with maybe slightly laxer regulations. Not talking about a situation where you think that the customer has been transferring money to crypto to known illicit addresses, but if there are just these sort of indicators of higher risk, that they're, it might be entirely above board and the person hasn't been shown to have done anything wrong, but there are these things that you would think raise the risk relative to your average transfer. In that situation, you then go to your customer and say, okay, before we can go any further, can you tell us who has sent this to you? Provide this information, and we'll record it. If your customer provides an inadequate answer or doesn't respond to that, then there'll be an expectation that you don't make that crypto asset available to your customer. And the idea behind that, elsewhere in the regulations, the travel, we talk about having to decide whether to allow a transfer or quarantine it or reverse it if you don't have the required information, and that's on a risk sensitive basis. With unhosted wallet transfers, it's all high risk because that's why you're collecting the information. In that situation, the expectation would be if the information is not provided, then you wouldn't make it available to your customer. I think the firm would then have a choice: do you reverse the transfer or do you quarantine it? And I think that again goes back to the risk-based approach. So that's a slightly long-winded answer. But
no, I think that's actually more detailed than you hear all the time. I will say, look, I mean, at TRM, we are an answer to some of those questions, right? We are anti-money laundering for crypto, and part of that sort of risk-based approach, that compliance stack. And I can tell you that talking to our clients every day, there's every business, a crypto business in the space takes a slightly different risk-based approach and sort of how to engage with different types of risk. As a plug, we did a TRM talks about a week or so ago with compliance professionals at exchanges who delved into, I think it was hot topics in crypto compliance, that delved into what a risk-based approach looks like for their businesses. So definitely sort of that would be one to also consider. James, I'm going to stick with you for a moment as we sort of move on a little bit. There's been a lot in the stablecoin space over the last few months. Some of it, in my view, has been building really for some time, really almost going back to 2019 when Libra launched, Facebook's sort of now defunct stablecoin project. But there's some has also been in direct reaction to the sort of Terra USD collapse. Would you sort of talk maybe broadly, and then we can dig in a little bit to Treasury's work in the stablecoin space, whether it's the consultation, whether sort of, well, a number of different consultations, one on stablecoins, one also on sort of managing risk in the stablecoin space. And Ian, would love to sort of get your industry perspective on that in a moment.
Sure. So I can't speak to this fully because I deal with the illicit finance side of crypto. There's a separate team that deals with the sort of the broader financial regulation and financial stability questions, and it's not my place to go off piece and talk about their policy area. But what I can say in terms of the illicit finance side of things is, so stable coins are interesting, as are sort of I think any coin which is backed by or linked to another sort of reference asset, which is that they may already fall within the scope of AML and indeed other regulations, depending on whether it fulfills the definition of a security or not. There's obviously no single answer to that at all, because it really just depends on whether on the specifics of the individual coin. But from an AML perspective, potentially you could be looking at something within scope of the travel rule, or it might be something that's within the scope of the funds transfer rule, because the coin in question fulfills the definition of e-money, for example. And then if something fulfills the definition of e-money, or if it's caught by another bucket of the financial regulatory system, then the obligations that apply might be slightly different. So that's one obviously very important thing is to identify clearly where this specific product falls, because even small differences can make quite a big regulatory difference. But I'm afraid, I can't speak to the other questions.
That's really helpful. And I think look, a lot of the illicit finance risks are the same in the stablecoin category as in any other sort of asset in the space. Ian, if you want to sort of jump in here, on stablecoins, you could probably get a little more far afield than James is able to in his role. What is sort of the framework today? And honestly, it's mostly in consultation form. But what is the sort of the framework, or how do you see the framework developing for stablecoins in the UK, and sort of what developments have we seen over the last few months?
Yeah, we've heard a lot from the government guards regulating stablecoin issuers. And just to sort of set the scene, we'll see policy come through soon, or new regulations basically treating stablecoin issuers as e-money institutions. And the US doesn't have electronic money. The UK and Europe have this, if you like, intermediary piece of regulation that allows competition in the financial services sector, which was really progressive in my personal view, from payments regulations coming out of Brussels and then being transposed into UK law, along with a host of other sort of progressive digital bank policy. Another example would be open banking in the UK, allowing competition to thrive. And so that's why the UK has a great reputation as a fintech capital for innovating financial services. And so back to stablecoins, we responded to the consultation last year, naturally, and the group that we formed to respond to the consultation on how to regulate stablecoins. And the main question was, should we regulate stablecoins like e-money? The answer was generally yes. Again, everything's not perfect, but the community generally agree this is the right approach. Stablecoin issuers should not be treated like banks. That's too much of a regulatory hurdle for stablecoin issuers to get over, and could perhaps stifle innovation, as many other jurisdictions are looking at regulating stablecoins. And this, yes, as you mentioned, Facebook's Libra and then Diem, which is now dead, sort of put this into the focus of governments and policymakers, rightfully so, because it's their job to protect against financial stability. And what the e-money regime does is focuses on consumer harms, which is really important, because we wouldn't want systemic stablecoin issuers to fall over and then everybody lose a lot of money. Where what we also see is the UK government provide there's a consultation live in terms of backstop for if an issuer of a stablecoin becomes insolvent. So there was protection against folks losing their assets, and will also, at the moment.
Ian, let me just stop you there, because actually that's a really good one. It just sort of point, right? Like, people ask sort of, well, has regulation yet come from sort of what we saw with Terra and some of these other stablecoin projects today? And it seems like actually that was an example of regulators moving almost in real time to address an issue that was occurring in the space. And I point to that as really the one of a very few examples. I think most other sort of guidance or consultation was in the works. This struck me as something that may not have been, and may have something moved very quickly. And I think, to me, it's actually extraordinary, having been a regulator and worked at U.S. Treasury, to see regulators move that quickly on that. I mean, is that any sort of thoughts there?
Well, that's a very good point. And this isn't James's department, and we can only speculate here. However, I personally did think the timing was interesting, as this consultation was released shortly after the Terra debacle. And you could also look to the detail of the consultation that doesn't quite answer some of the big questions, like where's the funding going to come from in terms of the backstop for an insolvency. So that will be when we respond to the consultation. We'll fire these questions out, and I think more detail will come. So you could assume that this is UK government reacting quickly to a market event, but this was policy takes time to be consulted with all the relevant stakeholders, and then to go through parliamentary scrutiny, which it will do. But yeah, I think there's a bit of both in play here. This was already in train, but perhaps released slightly earlier for the reasons you mentioned with the market events of late. But we hope that we'll get the right answer when we go through the consultation phase.
Terrific. Thank you so much, James. Moving on a little bit. One sort of, I think, extraordinary release coming out, I believe, in April. And it was the plan to make UK a global crypto asset technology hub. And it took a lot of what we're talking about already, right, from a regulatory perspective, stable coins, I think sandboxes were mentioned earlier in this conversation. it was an extraordinary short, but a really extraordinary document, because it didn't say sort of we need to rein in this space. It didn't say we need to sort of ban the technology here. It said the UK wants to be a global leader, a global hub for cryptocurrency, and these are the steps that we're going to take. Would you speak to that a little bit? I thought it was a real one of those sort of watersheds. I think in the US, it was the executive order. This was sort of the equivalent of that. It was a call for leadership in the space. Talk a little bit maybe about how you got there, or sort of, and how you ultimately see that, and now maybe how we see it playing out.
Sure. So, I mean, that particular document is obviously a much broader team of people other than
Sure,
me.
absolutely. Yeah, it's a reaction. Yeah.
So I think the way we've approached this, as with other fintech issues, is that, when a new technology with the potential to be really transformative comes along, we don't want to be getting so focused on the risks that you end up obliterating the potential benefits. The right way to think about it is that, when anything novel comes along, then that can pose new risks, because the way in which you deal with risks in, for example, with money laundering, hasn't really taken those into account, or had to take them into account before. But the aim should be to try to foster the strong and safe growth of the sector, so that we're getting the benefits of the technology, whilst making sure that people can still use it without finding that they're actually transacting with dodgy people, or that they're unwittingly exposed to other kinds of risks. So if that sounds a bit like motherhood and apple pie, well, I think it's the right way to start. The right starting point is to say, let's maximize the benefits, and really be as targeted and proportionate as possible when we're trying to get rid of the risks. I think the second thing, which this is me saying, it's not just motherhood and apple pie.
I think we've lost James for a second. I'm going to jump to Ian real quick, and then we'll get back to James. One huge takeaway for me from that from the plan was this really leaning in on public-private partnership, discussion of sandboxes and reaching out to the private sector. Can you talk a little bit about sort of how you viewed this plan when you saw it come out? I mean, a super exciting moment as I saw it, and definitely sort of the fact that it was really a call to industry, a call to sort of, think through some of these issues from government at high levels. And any thoughts on sort of the plan overall and where you see it headed?
Yeah, well, as I said earlier, in the last year, as CryptoUK has become a competent voice with over 130 members, yourselves included, and many of the major players in the industry, Ari, we can bring together a good cohort of subject matter experts to discuss policy, whether it be around stablecoin. We have Circle as members, and Circle engage regularly with policymakers when it comes to financial crime. We have yourselves and other blockchain analytics firms to present to government, to talk about the issues, whether it be around travel, whether it be around ransomware. So it's good. It's good for both public and private sector that we have the trade association that does this work of advocating and educating and supporting fair and balanced policy. And also it's good for the government, James and his colleagues, that they can reach out to industry using a trade body rather than just bilaterally talking to hundreds of different organizations. It's much easier as a government official who's very busy, doing good work, to engage with industry trade associations, because the trade association is there as a bridge effectively between the private sector and the public sector. So yeah, it's been really positive in the last year or so here.
Fantastic. That's really helpful. One of my favorite parts of that plan that I wanted to ask James about as well is the Royal Mint minting an NFT. And I will admit that I have been continuously monitoring that, and it has not happened yet. I even Googled last night to see if there was any way that we could break that news on TRM Talks today. But it seems to be a work in progress. And they said this summer, so it's this summer. So I think that, and when you ask about it, like, it's a cool thing, but in all seriousness, I think it's an attempt at a display of sort of really leaning in on becoming a crypto hub.
Yeah, you can look at this from a million different angles. And when this was announced back in April by the government, that Royal Mint was going to issue an NFT, the community was, oh, that's just a PR stunt. Well, actually, it's not a bad PR stunt. So you could argue that, with my KPMG hat on, KPMG buying Bitcoin and putting it on a balance sheet, it's not there as an investment. What it does is it shows the community that we, are engaged in this, and we're sort of learning and developing capability. So the UK government, by issuing its own NFT, it's not, to raise funds. They've got the government bond market for that. It's to show that we're committed, and we can also understand all of the elements involved in issuing a token, whether it be regulatory, whether it be how you store it, whether it be legally how you report it, and so on and so forth. And so that can be perceived to be a positive if you look at it from that lens.
That's awesome. Let me finish here. It's crazy. I was in the UK a few weeks ago. I feel like everything I'm
running along the Thames.
I'm running around. Everything I'm seeing right now is a story on something that UK regulators are doing in the crypto space today. I mean, it's really been extraordinary. I think I tried to post this yesterday, but I saw the top 3 stories on CoinDesk's policy page were all involving UK regulations or UK activity. I mean, and then we see what's happening obviously in the government today, opening up so many other sort of questions. But having you on, I want to take advantage of sort of what's next. I mean, what's top of mind for you? We even in MiCA, which has dropped this week, which is the EU's sort of framework. They do stay away from things like DeFi, like NFTs for the most part. I mean, is that sort of what's coming next down the pike? Is regulators really trying to understand sort of emerging technology? Or I'll let you sort of, what are your members sort of most interested today when we think about what's next, kind of taking out the crystal ball?
Yeah, well, there's a lot there, so I'll try and be as succinct as possible. Touching on MiCA, as you talked about, we just had the trilogues wrap up, and now we're at the technical drafting phase of the overarching piece of regulation that covers off many aspects, both activity based and market participant based regulation, which isn't perfect, but it sets a good transparent level of clarity for operating within Europe. So what we are, one of our key positions at CryptoUK is we need a joined up approach, and we need a holistic approach to regulating the sector. And that's exactly what John Glenn, the Minister for the City, said in his April speech. And we expected prior to the turmoil this week something to be mentioned at the Mansion House piece on the 19th of this month, which was going to be by the outgoing Chancellor, Mr. Rishi Sunak. So we'll still watch that and see if the new Chancellor speaks to any of that. But that's top of mind for our members. Is we need clarity. We need to make sure that we are competitive as an environment for crypto business to come and set up, and we need to ensure that this policy, that new regulations that do come, aren't just using existing policies that perhaps don't work in a digital age, and we've seen some of that friction with current particular aspects of certain activities such as promoting crypto assets. So yeah, in short, I think there's appetite in government, these discussions we're having. So top of mind for us is to make sure that we get this joined up cohesive approach, and ultimately it would be great if UK government could put together a stronger task force in crypto assets and have maybe a crypto asset czar, somebody that's engaged to lead this charge and bring all of the different departments together.
Terrific. Yeah, no, thank you so much. James, when you were going, Ian told me that he's working diligently with the Royal Mint on the NFT project, and he wants to make sure that he's on the NFT in some way or another. Basis on that. No, I did ask him when that's happening, because I've been looking every day to see sort of but I hear this summer. I'm going to ask you sort of the last question and kind of leave it there with you, James. And it's similar to what I just asked Ian, and that is, look, as you're sort of wrapping up to some extent, right, travel rule and where ultimately things come down on that, sort of what are the next things that are top of mind? And I just used sort of MiCA as a very recent example. It's, look, there's a lot in there. I mean, it's probably the most comprehensive framework that we have globally for digital assets, but there's also a lot that's not. And it seems like, things like DeFi and NFTs, and I can tell you from a US regulatory standpoint, it's very much the same, right? The US Treasury is just starting to think about what are illicit finance risks around NFTs and in the DeFi space. What is sort of, if we took out the crystal ball, and crystal balls are short time frames in crypto, right? We're 6 months, a year down the road. What are sort of things that are top of mind for you next?
So as we sort of move towards implementing the travel rule, one of the things going on in parallel is some of our international collaboration around the question of ransomware. So we have been working through the G7 and with like-minded countries to try to really deal with this threat, because when you're seeing instances like the Colonial Pipeline attack or other attacks on critical national infrastructure, this is a real priority we need to deal with. And crypto has an unfortunate role in that, and that is often the method through which the ransoms are paid. So one of the big things that we're working on at the moment is to try to both work with industry to mitigate this risk, but also to try to get as many countries as possible to adopt the FATF standards for crypto assets, so that there aren't any safe places for cyber criminals to hide. Because I think this is one of those areas which is, it's of increasing concern to a lot of governments, and it's definitely a priority for us. I think also one thing I was going to say before my computer crashed, apologies for that, but what I was going to say then was our approach, in terms of getting the upsides whilst mitigating the downsides, is very much premised on this idea that there isn't a trade-off between the sector growing and the sector being a safe and stable place to do business. They're very much two sides of the same coin. And whenever we look to how to approach questions of anti-money laundering regulation, we're quite clear that a sector which is crypto sector that is perceived as being a safe, well-regulated and legitimate place to do business is one that is going to thrive. Obviously, we want to make sure that the regulations are done in such a way that we're not stifling innovation, but we don't see those two goals as in competition. And so, as we look to the future, that's, I think, what's going to be forefront of my mind.
That's terrific, and thank you so much for that. I think that thank you both of you for joining TRM Talks. When you think about how the community, how the crypto industry wants to hear and understand about these issues, you want to hear from regulators and you want to hear from real leaders in the space. And I'm really, really grateful that you were both able to come on today. So thank you so much. To the audience, check out the handouts tab. TRM has training, certifications. There's a great blog post this week on some of the differences that we heard from James on unhosted wallets in the UK and how the US was thinking about them about a year or so ago. Subscribe to TRM Weekly Roundup. It is a great resource every week for crypto news on regulatory issues, and join TRM Talks going forward. And really, thank you to the two of you, and thank you so much to everyone for joining us and for working together to build a safer financial system. Have a great day, everybody.